Look, the bottom line is so long as Bitcoin continues to outperform most other asset classes, I think there's going to be a range of positive outcomes for the various public Bitcoin treasury companies, or PBTCs as I like to call them. But all well-run PBTCs should materially outperform spot Bitcoin or spot ETFs, because a well-run PBTC will employ leverage and potentially accretive stock issuance at a premium to NAV in order to grow that Bitcoin per share. And I like to put it this way, and I can't emphasize this point enough. If you buy one Bitcoin today and you hold it for 20 years, in 20 years, you've got exactly one Bitcoin. If you buy one Bitcoin via an ETF, in 20 years, you'll have something like 0.95 Bitcoin, because the fees that accumulate are generally paid for by selling Bitcoin. Whether the investor wants to do that or not, that's what's going to happen. Those fees, by the way, they may not amount to much in any given year, but the impact, of course, is compounded over time. And my view, at least, is that anyone interested in Bitcoin is almost by definition concerned with longer rather than shorter timeframes, right? If you want to store value for a week or a month or even a year, go ahead and use the dollar or the pound or whatever. It's those of us that are looking to retain our wealth over generational timeframes that are most drawn to Bitcoin. In any case, the fact of the matter is this: if you buy Bitcoin through an ETF, you are contractually guaranteed to own less Bitcoin per share over time. Now let's compare that to a well-run PBTC. If your shares in a PBTC today represent one Bitcoin, in 20 years, those same shares may represent 5 or even 10 Bitcoins per share. So 1 Bitcoin, 0.95 Bitcoin, or 5 to 10 Bitcoins. Why on earth should these assets trade at the same price?